Don't place a trade based on what you're seeing in this video because there is no guarantees of making a profit in the market. It takes you a long time to become a good trader. So this video here is just to educate you to become a much better trader. Hey traders, John Howell here, of course. So we're gonna have a quick update on what the indices are telling us right now and what's really going on with the indices. We just have a quick little, it'll just be a very, very quick one. Now, the one thing I want to share with you is that looking at the S&P 500, even the Dow Jones as well too, we can see that there's a lot of things going on here, right? So we definitely have, you can see here on the Dow Jones, look at this here, right? It's just like, this thing is, if you've been watching my videos for the last couple of days, I've been talking about how the Dow Jones and the S&P 500 have been building a lot of pressure. So, you know, this market update is obviously all about buyers building pressure for a big move. And, you know, and as you can see, right, low, higher low, market's running up, and we're still getting this weak sideways period, right? Every single candle we've been adding to here is just a weak pullback, right? We're not getting any strong sells like we did here. It's very, very, very weak through here. So we're getting a very weak pullback, and we're getting the 20 moving average, which is a momentum gauge, pushing up. Those two things combined, okay, those two things combined is a very bullish move. Now, it would be the exact opposite if we already went for a big move, and then we're getting this, okay? So what I mean by that is this, okay, is like, because we only had a short move and now we're having this move down through here, that's a very, very bullish move. Why? Because this last leg up wasn't a big move. Okay, but if we have a big move like this, and then we get a weak pullback like that, and then we get a breakout, this is probably likely to fizzle out through here. Okay, now let me just share with you an example of what I'm talking about here. I'll just squeeze my chart up so you can see what I'm seeing through here. Actually, you know what? Let me bring up just a blank candlestick chart here, and I'll share with you what I'm saying. Here, right? So if I open up my chart here, notice how, there we go through there, right? So notice how we have two different similar situations through here, right? We have this low through the high, and then we have this sort of, see how it's a flag formation? But why is this flag formation not likely, even if it does follow through, likely to be a false breakout compared to, say, this one from here to here? Why? Because this leg was a very long leg. See it went up for a long time, and then we had this short pullback, and then obviously the breakout was to the downside too. So that's what sent it to the downside. Now what are we getting? We're getting a very run up. We're getting a nice pullback. Now, yes, we could get a break to the downside, and we continue down through there. But this one here is now likely to be a high, and we're now likely to see something like that there. Now, again, guys, we never know. If it does break to the downside, then we're probably going to see another move like this here, and probably back down towards these lows through here. But this one here, right, you can see how if we do get a break up and out of this leg, how this low through here, we didn't have a big move prior to the flag formation. So when that happens, it doesn't need a lot of flag for what we call price and time to be balanced. See, what I mean by that is, see how if you look at this leg up, right, we had a very long leg up, and then we had a very short flag. What I mean, long, short, right? And what we need is we need something to be basically balanced. See how we had a very short move up, and now we're having a very short flag, right? They're pretty much pretty much balanced between the leg up and the leg down. And what I mean by that is, it wasn't a very long move. So that's the reason why if we do get a break up and out, it's not likely to be a false breakout, if it's not likely to be a false breakout. Now let me share with you another example of what I'm talking about here. So if we go and have a look at this, see how we had this big move up through here. So we had a very long move up, and look at this here, right? See how we had this sideways movement through here. So if you look at this here, we had a very long move up, and then we had this sideways movement through here. Okay. So with that long move up and that sideways movement through there, as you can see, right, it was very, very, very small compared to this move up. We had a very long move up, and then we had this small move. And look what happened. We did get the breakout, but see how it was very short-lived. It was also a false breakout, and then the sellers came in and knocked it down, and then we continued up. So you see what I'm saying through there? So that's the reason why, even if we did get this move up, then we had this flag formation, even if we did get a break up, it might go up a little bit, but then it's probably likely to do that. But because it didn't do that, this is actually now a bullish looking, but it's actually a reversal flag because it actually broke to the downside and not to the upside. Same for where we are right now. Okay, yes, it is. We're getting a very short move up, very short down, and it's looking very bullish. But hey, if we get a break to the downside, then we're likely to head down. If we get a break up, especially above new highs and volume, then that's probably going to see us sending us through the roof and probably seeing us seeing a very nice vertical move because we've been not really doing much for pretty much this entire year, apart from the start of the year. We went from the very first month or two, we went, and then now we've pretty much done nothing. So once we do breakout, it's probably likely to vacate the area quite nicely and probably have a month or two, maybe even a run towards maybe the Christmas time. I don't know, guys. I'm just reading what I'm seeing right now. Anything can happen. So that's what I'm seeing there on the charts as I'm speaking right now.